Hello, everyone. My name is Sebastian McMahon from IA Financial Group, and this is the month of financial literacy. So I thought I'd be here with you to talk about inflation and your personal finances. So inflation and your purchasing power. If you're at home, you're seeing numbers of inflation on TV. Maybe you say, "Well, that's not really something that affects me. It's more macro stuff." Now it does affect you. Or maybe you're in the other camp and say, "Well, everything's going up so fast. What are they talking about? About 4% inflation? I see 50% inflation on my grocery bill." So just to make things put everything in its right place right now. So inflation is very much a tax on your standards of living. So the price of goods, the price of services goes up with time, and it's important for you as a consumer, as a Canadian, to make sure that you protect yourself against it as much as you can. So you can't really avoid it, but it is possible to protect your assets from inflation. This is the main message here. So right now we are in November 2021. Inflation is currently running at an 18-year high. So we're running at 4.4% inflation. That's above the target of the Bank of Canada. You say, right? So there's that. But I do have some money in the bank and I have a job, so it might be protected. Well, if you look at your bank deposits in the bank, well, the rate of interest that you're being paid is linked to the Canadian 3-month interest rate. Okay, and if you subtract from that rate the inflation rate, so that makes it the real 3-month interest rate, as you can see in the the red box that you see there, since 2008, that rate has pretty much always been negative. Besides a few little moments where it was briefly above zero. So putting money in the bank since the last 13 years has been a losing proposition in the sense that it doesn't protect the value of your assets against inflation. So that's one part of the puzzle here. The other piece is your salary. So of course, if you have promotions, if you're going up the ladder, then your wage is growing maybe faster than inflation. But if you look at the average weekly earnings of Canadians, if you look at the growth of that and you subtract inflation, as you can see in all of these red dots here, well, pretty much almost 50% of the time over the last 30 years, the growth rate of that has been negative. So the average hourly and weekly earnings have been growing at a slower pace than inflation. So you're not really prepared that. So how can you protect yourself against inflation? Well, you can protect your assets. So there are a few ways to do that. So there's real return bonds that are an option. We'll look at that in a second. Real estate, so the value of your home, if you have one, if you're lucky enough to had to own a home, then it goes up tends to go up faster than inflation. Balanced portfolios, and maybe there are other solutions out there. Anything else, we'll see. So real return bonds, so they're issued by the government of Canada, and they're designed to keep pace with inflation. So in a nutshell, twice a year you will get an interest payment, which is we call a coupon, and this is CPI adjusted, so it's adjusted for inflation. So you're protected there. And when the bond matures, so at the end of the life of the bond, the amount that you get back is also adjusted for inflation. So that's a good way to protect yourself from that. But if you don't have real return bonds, then again, the value of your home, or if you're fortunate enough to have a portfolio of real estate, well, residential housing prices, when you look at the annual growth rate and you correct that for inflation, so the year-over-year rate of growth of the price of a house in Canada minus the rate of inflation, well, besides the 2008 recession and maybe a little burst between 2018 2019, after we had a lot of growth on housing prices in Canada, it became an issue when we had some measures to slow this pace down. Well, as you can see, residential housing is protecting you from inflation. So if you own a home, probably the value of the home is growing faster than inflation, so it protects you. So that's one way to be protected. The other way is balanced portfolios. So as you know, I'm a manager of balanced portfolios at IA, Managed Solutions. So what we did here is that we took a portfolio that was rather conservative, so 50% Canadian stocks, 50% Canadian bonds. We started in 2005. So every single year on January 1st, we rebalance the portfolio. It's 50% Canadian stocks, 50% bonds, then goes on for a year, and then we rebalance at the end of the year. And we looked at the total, the cumulative return of that, and we subtracted inflation and gives you the line there. So over time, over the last 16 years, this thing has returned after inflation is factored in about 45%. So you don't need to be all in on the stock market to be protected from inflation. Balanced portfolio can do that. As you can see, some years the value goes down after inflation and even before inflation too. So there's some volatility there, but in the long run, being invested, staying invested is a good way to protect yourself, protect your assets from inflation. And is there anything else? Well, maybe just for a good laugh here, but collectibles are an awesome asset class to own when there is inflation, when there is excess liquidity in the market. As you can see here, this is from PWCC. This is an exchange of collectibles that you can find online. The address is on the bottom. The PWCC 100 index, so they look at they built an index out of collectibles. Recently, in 2020, with the liquidity and inflationary pressures that are there, look at the spike that we've seen in the value of collectibles. So if you're fortunate enough to have a nice collection of hockey cards, baseball cards, comic books, whatever that you collect out there, I strongly encourage that you go on that you go on a website and see what are the prices. Maybe you'll be in for a surprise. So maybe you have something there that has protected you from inflation a little bit more than you expected. So I hope that you learned a thing or two here about inflation and the relationship with your personal finances. So to follow us, ia.ca/economy, and I encourage you to go on the Economy and Finance 101 section that you see on the bottom of the screen here. There is a special edition that is focused on inflation. So what is inflation? How is it defined? Who measures it? Why do we talk about it so much? So you can listen to that if you are so interested. Also, you can follow us on Twitter, and you can follow me on LinkedIn for more information. So thank you, everyone, and we'll be seeing you around soon, we hope. Thank you.